Hello friends, welcome back. In this quick demonstration, we are focusing on ES chart. This is set up to 37 minutes right here, and we have dropped a tool here from a tool set called 9 price targets. Now this time frame has been chosen because 3 plus 7 is 10. We like to use the frequency of 10 because the cycle resets after 9 numbers. Right now what we have is a hotspot, and I'm going to place this hotspot at various locations where I see a big bar, as you can see here. Big bar, big bar, big bar. The rules we have is we're trying to find out where the reversals are going to be. So the tool placement requires certain rules. One is pretty much you see a pivot, let's say this one, and we move the hotspot there. And what we're expecting the market to get close to, this current week, and this is Sunday open. We're expecting market to go to the second frequencies because this is where I am interested to see how much further away they have moved from a certain point, and we go and take the reversals. The second use case for this is it doesn't. Now remember, if market is moving sideways and this tool is looking at the price and is looking at some other kind of advanced calculations to find those targets where market is showing some interest of reversal. But there is also another section of this philosophy which is talking about big bars. You can see here. So if I locate these big bars, because these are momentum bars, or they can also be a war bars where people are fighting because sellers wanted to take it out and they could not because our location, which has this energy point, we already know these points in advance from this one click, right? There's an advance. Now this could be exhaustion or this could be continuation. You can see this one, you saw this big bar and you assume that it's going to continue to go down, but it reversed. Same thing here, we saw a big bar, assuming that the sellers are in control and the buyers have been squished away from the market. It's going to continue, but what happens? Goes to a level and reverses. What's going on here? To understand that what's really going on is a 6-month journey, but just to demonstrate what you can achieve, the possibilities are shown here. What you need to understand is, how do we decipher if this is going to be exhaustion or continuation, right? This tool gives you multiple probabilities of what's going to potentially happen. So that is one use case. So let's assume that now you can see this bar. If you observe these 2 weeks, right? Here what we have is this big bar is exhaustion. It ended the trend and it bounced up. There was a panic move down and it went up. Here it started the move and continued aggressively. So that is where the understanding of the targets, why will they go here, is we have to use C54 for that, where the market makers are going to take it. C54 from here, they're going to take it here, but this tool is also very powerful. So now if I put it initially on this top, right? It's a big bar. Where are they going? And this is the final termination point. Now see the challenges, of the trading. That's why you need to have a group of tools put together as a chess game. the probability. If this probability is showing that if I put this tool here on a big bar, assuming this is continuation, where's the termination? You can just see right here. So these are the extreme termination points. So now what happens, let's say you thought it'll go to second. Now this is where I want to have a discussion that if the bar breaks these cleanly at these levels, we will not use those levels. This was a clean break, cannot use this. This was a clean break, now cannot use this. Now this stopped here. If we had traded this one to the long side, this was a loss. Because we said 1, 2, right? And remember, energy doubles. If the 2 fails, it goes to 4. 1, 2, 3, 4. So be aware of those events. So if you take a loss here, you double, triple, quadruple your money here, right? So that's how the trading works. So loss is part of the game. Once you get rid of looking at the losers, managing losers, you start making consistent profits. But always keep in mind the trade you're putting on, we always assume that, hey, this probability is, if I lose here, I learn something from it. I have information now. So here you can see this one was exhausted. Sorry, I apologize. This one exhausted itself here and reversed. So if you put the rules in your mind like these, that hey, every time it goes to 2, oh, it reverses. Oh, 2, it reverses. What about here? Right? That's why we have probability space here. So deal in terms of probabilities and understanding. So this is one rule you have to be cautious about. Now we can see what happened here. It stopped it, and then it should have gone from here. It did not. I mean, I'm not showing you anything in the back, what really happened here. And if I just do C54, this is potentially my target. So let's put C54 into the mix. All right, so I dropped this tool, C54, right here. This, we have to draw the trend line. You can see this line is touching 1 here, wicks were there, 3 touch points, and then we are projecting it from the top. Okay, this trend line is projecting from the top, and we're doing some calculation on what does it show. The market is projected to go here. So by just knowing that information, you know that here the confluence of 2 major frequencies came together. Now I have an extra bias. You can use trade algos, you can use automatic scenarios, whatever suits your fancy, but the trade location is the key here. All right, so now let's move the tool we were initially discussing, the 9-point frequency targets. So let's say we move the tool right here on the big bar. Let's move it on the big bars, right? So big bar is here, and it rejected, did not reach. We have a new big bar. Let's move to the new big bar. All right. Now we can use these levels, right? So what will I do if I want to use these levels? I personally mark these levels, right, like this. I already showed you C54, and then I'm looking for market to let it go here. If it comes back fast, for example here, now this could be 50% retracement. As you can see, we know what those basic retracements of Fibonacci's. 50 is very important. You take this whole range, chop it into 50 somewhere right here, right? If you want to do 61% Fibonacci numbers, it's going to be somewhere here. Perfect. Does it mean anything? Maybe, maybe not. There's a much powerful association here for pi and Lucas numbers than Fibonacci numbers, but that's a off-topic discussion. So right now, I will put my entries somewhere. If it comes back, right? I want to make sure that I have confluence. First of all, I'm just showing you this potentially 61% retracement. I apologize for my cough. 61% retracement is right here, and we can see that we are having a tool confluence. If I put C54, we have 24 tools on just price markets, how to price the market. But here it is. So you should better not change the market, let it prove itself, right? So if you want to play and see if your philosophy is going to work out, just put a limit order here, pull you in. All right, so this is how you got to think like a trader. It's a probability game, and managing the probability is our scenario, right? So this is also a big bar on the bottom side too, same thing. All right, so this big guy also was available here for us. Boom, right? Again, as I said, it could be initiating or it could be ending exhaustion. And when this exhaustion is happening, that's why we have other lines. Same thing. We are tracking 3 different kinds of frequencies, and the second frequency, as I said, is of interest. Okay. So this is a second frequency. Let's mark it, because I think that signifies is that we have reached a certain depth of retracements possibility. So if I was sitting here from this exhaustion, if it come down and pull me in, it never happened, and then we had to wait. So mark these levels. We don't know. You can see if you had not marked these levels from this, you will never know this point exists. So you never know this point exists, right? You have no awareness of doing the homework is the key. You never knew this points existed, right? Now you can see by just following all the calculations and complexity of thousands and thousands of lines of code of mathematical logic is encapsulated here. Focus on trading, and this is how we can. I'm showing you the great possibilities exist, right? So from this one we already saw. Oops, this one we already saw where we were. From here also we saw same values we saw from here. So I'm just marking these levels right here. I marked it, right? Number 2, it never reached here, which is okay. It doesn't matter. So now if is there any initiative? Initiative means in the beginning. Exhaustion means at the end of the move. So exhaustion was here, right? Initiative was here. That's the key you need to understand. All right, so let's do the same thing here. So I saw this big bar and I moved it here. Again, the rule was not to break this clean. It stopped. If this bar would have broken and closed below this, this will not be usable by me. So I will take this and mark it. Take this and mark it. Now, depending on the volatility, it will expand according to volatility. So marking these levels takes few seconds. I'm just talking more than I should be. All right. So now this initiative happened, and as I said earlier, follow the rule. This initiative happened. Mark these levels. Second is of interest. First also you can mark it, but second is of greater interest. Mark these levels. Okay, this one is a big bar. First one is not usable because it broke very aggressively, then it stopped. It stopped where? Number 2. Now we have overlapping things going on here, and there it is. Now we're going to proceed further. This is the initiative bar. So initiative bar, market was going up and up and up. This bar did not break the first level at all. You can see. I'll mark these levels. Small one for the first one and big one for the second level. Obviously third one is there as well, overlapping. So market, if it goes here, you have these levels for upcoming week, right? And this is where and how you can participate in these moves. This happened, rejected, and we got. Let's move it forward. This is also another move. The rule is pretty same. Now here in this rule is very clear. As I said, if these levels are broken, especially the white ones, we have 3 levels, right? White, yellow, and red. Now if this is broken very clearly by a single bar on this time frame, remember the time frame I'm using is 37 minutes. You can use, this is for higher time frames. So we have a weekly picture of what the swing points are going to be. This is clearly broken, not usable. Second part of it is right here. Second yellow, second white, red, they all are clustered here. And you can see the prices are also posted. I think it's readable enough. And there it is. So what you can do, trade. Now the entry is pretty simple, right? You can also use trend lines. Let it break. Or you can use Gann 45 degrees, the same scenario, that you can break it and then let it break, hug it on the other side. These are basic trading methodologies, how we can enhance it. But the value we bring to the table is knowing these hidden secret points, knowing these in advance, days and weeks in advance, right? And this is where the real research takes place. And knowing these points and trusting these points eventually with time, you don't need to panic and be reactive. You just wait for market to reach our levels. Anxiety will always be there before pulling the trade, but it's going to be much more exciting knowing that you have a game plan. Thank you so much.